All right, why don't we start off with the move in the futures right now? Why do you think futures are moving lower? We saw a big spike in the markets following Jay Powell at Jackson Hole, seeming to indicate the rate cuts were coming, or at least very likely. Why the pullback today?
Well, I think Friday you also had a lot of investors off sides. I mean, it was not really expected that Powell would say those things. He had a lot of pressure, but for him to say that, you had probably a lot of short covering. You saw the Russell, the value stocks do really well. And look, we're in the last week of the summer, so volume is probably going to be pretty low. And you've got some profit taking as well. And really now looking to see forward to Nvidia and then the fall where the earnings come. So Nvidia is going to be key for the AI trade, especially the ones that's done really well. And a little pullback after Friday's unexpected rally is normal.
So, Sarat, let me ask you, how do you see tech moving from now until those NVIDIA earnings? In recent week, we've seen a lot of weakness in tech. We saw a broadening of the market, maybe people concerned about valuations, or some of the other reports that have come out, like that MIT report that said it found 95% of companies saw no benefit from generative AI, and then Sam Altman of all people saying it's kind of a bubble, seemed to really weigh on the sector. What are you expecting over these next couple of days?
That definitely did. And I think, investors have been cautious. Valuations are at the higher end, especially of the AI stocks. So it is normal to take some profit taking there. But there's also opportunity in other areas of the market, Frank. If you look at, the staple side, or you took at industrials, and in some of those areas just haven't done as well. So, a couple of things. One is definitely people taking some capital off that have done very well. And then also kind of looking at other areas that if and when rates come down, you can see dividend stocks doing well. You can see other areas of the market that companies that need access to capital that do well. So I do think the broadening is good. Doesn't necessarily mean the AI trade is over. It's just that you had such a great fast run that it's just natural to get some consolidation at this low.
All right, so your word of the day is risk. Does that mean you think it's a kind of a risk-on situation where basically investors are willing to take more riskier bets in the market, higher valuation names, high beta names, things like that?
It's really to look at the portfolio and say, hey, where is the risk in my portfolio? Some stocks have done really well. Some areas have done really well. Should I be over concentrated? If I am, if I look through all my investments, whether it's in the taxable, non-taxable, private, et cetera, I think investors need to focus on that, because sometimes you get too complacent as to, hey, just because it's done well. So I look at risk as, risk reward. What is the opportunity going forward from here?